Spain's property market, long admired for its appeal to overseas investors and tourists, finds itself at a critical juncture, grappling with a significant housing crisis. Recent nationwide protests have highlighted the growing divide between property values and local affordability, prompting serious questions about the future of housing in one of Europe's most visited nations. This situation, characterized by robust price growth alongside mounting social tensions, presents a complex picture for both residents and investors. Over the past decade, Spain has experienced a substantial increase in property prices. Rents in major cities such as Madrid and Barcelona have nearly doubled, while wage growth has remained stagnant. This disparity has left many residents, particularly younger individuals, struggling to afford independent living. The average rent per square meter has risen from €7.20 in 2014 to €13 in 2024, significantly widening the affordability gap. Exacerbating this issue is the limited availability of public housing. Only about 2.5% of Spain's housing stock is designated for public rentals, a figure considerably below the OECD average. This scarcity intensifies competition within the private rental sector, further driving up prices. Foreign buyers have played a considerable role in shaping Spain's property landscape. In 2024, US citizens emerged as the highest-paying foreign purchasers, paying nearly 30% more per square meter than British buyers. Overall, foreign investors accounted for approximately 20% of residential property purchases, contributing significantly to the upward pressure on prices. While foreign investment brings capital and stimulates development, it also raises concerns about accessibility for local residents. The influx of international buyers, attracted by Spain's climate and lifestyle, often results in properties being used as second homes or short-term rentals, thereby reducing the pool of long-term housing options available to locals. Despite the deepening housing crisis, Spain's property market in 2025 is projected to experience further price growth, estimated between 5% and 7%, with some forecasts suggesting increases as high as 8.5%. This growth is primarily driven by a persistent housing shortage, particularly acute in urban centers like Madrid and Barcelona, where demand consistently outstrips supply. However, this booming market exists in stark contrast to the mounting social unrest over housing affordability. In April 2025, tens of thousands of people across Spain took to the streets in protest, highlighting issues such as soaring rents, unaffordable property prices, and a lack of affordable housing options. In cities like Barcelona, rents have surged by a staggering 70% over the past decade, far outpacing wage growth and leaving many residents struggling to find suitable accommodation. In response to growing public pressure, the Spanish government has proposed several measures aimed at addressing the housing crisis. These include increasing taxes on holiday rentals to align them with hotel VAT rates and offering tax exemptions to landlords who adhere to official rental price indices. Additionally, plans are underway to promote the construction of social housing and allocate land for public housing development. Cities like Barcelona have adopted more assertive approaches, pledging to phase out all short-term rental permits by 2028. Such initiatives are designed to increase the availability of housing for residents and stabilize rental prices. Local governments are also considering measures such as banning new tourist rental permits and implementing stricter regulations on existing ones. For international investors, Spain continues to be an attractive destination due to its favorable climate, lifestyle, and relatively affordable property prices compared to other European markets. However, potential policy shifts, such as increased taxes on non-EU property buyers and the possible discontinuation of the Golden Visa program, may influence future investment decisions. Investors are also advised to be mindful of regional disparities, as while coastal areas and major cities offer high returns, they are also the epicenters of social unrest related to housing affordability. Engaging with local communities and understanding the socio-economic dynamics of specific regions is becoming increasingly crucial for sustainable investment. Spain's housing challenges are not unique. Similar issues are emerging in other regions heavily reliant on tourism, where balancing a robust tourism economy with ensuring affordable housing for residents is increasingly difficult. The situation in Spain serves as a cautionary tale for other nations navigating the complexities of global investment, tourism, and housing affordability. Spain stands at a pivotal point. The decisions made now will have lasting impacts on the country's social fabric and economic stability. Addressing the housing crisis necessitates a multifaceted approach that carefully balances the benefits of foreign investment and tourism with the fundamental need for affordable and accessible housing for all residents. As the market progresses into 2025, a balanced approach that considers both profitability for investors and social responsibility towards local communities will be essential for long-term success and stability in this evolving landscape.